Hello viewers, we'll be going over gold futures. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for gold futures. So back to the technical analysis, we're currently up 1.5% on the 1 hour chart. We have reached overbought RSI. We're still looking healthy on the 1 hour MACD. As for the 4 hour chart, what we have here, we are also at overbought RSI, and we see no signs of the 4 hour MACD converging. And one thing to note, today's volume to the upside is much higher than what we saw in the previous past days. And as for the daily chart, what we have here, we finally reached overbought RSI. And as for support, if we do manage to reverse and head down lower, the next possible support will be where the 18-day moving average resides, and that is around the price of $1,814. And we had previous resistance levels around that range that dated back to July 8th. And if we were to fall around that range, so let's mark that level, that'll be our first immediate support, and that price movement to the downside is roughly around 4%. So now let's examine the day-by-day probability model for gold futures. These models are available in the link below, so do check it out. As we progress to the 5th day, or a week of trading, we have a 25% chance for it to climb between 0 to, say, 5%, and an 8% chance for it to climb between 5% to 9%. And to the downside, we have a 67% chance for it to fall between 0 to negative 5%. So now let's examine the day-by-day forecast for gold futures. So we have 1 day out, that will be a Friday, and 2 days out will be a Monday, and so on. So we have 3 days out, 4 days out, 5 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the line below, or the trend below, is the one that we find on the line graph above. This trend dates back to May 9th to August 3rd, 2011. So let's compare both of the trends. So on the current trend, we start off at the middle Bollinger Band and ended averaging above the middle Bollinger Band. And on the trend in question, we start at the middle Bollinger Band and average above the middle Bollinger Band towards the very end. So what we have here is 1, 2, 3, 4 points, and we also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined was back in May 9th to August 3rd, 2011. Back then, gold continued to climb higher, roughly around 7.7%. If we head back to the day-by-day probability model, that coincides with this standard deviation of 8% chance for it to climb between 5% to 9%. Let's examine closer on the technical performance. On the current trend, we're 0% away from monthly high, up 10% from monthly low, up 3% from 10 simple moving average, up 4% from 20-day simple moving average, and up 6.4% from 50-day simple moving average. Compare that to the trend that we just found back in May 9th to August 3rd, 2011, 2 basis points away from monthly high, up 10% from monthly low, up 2% from 10 simple moving average, up 4% from 20-day simple moving average, and up 6.6% from 50-day simple moving average. So among the two trends, there are technical similarities. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.